Hey guys, just wanted to do a quick video about our RSI impulse strategy, scalping strategy that we're calling it in the community. Um, this has really been producing excellent results for everyone. We're just past our first week of a 100 trade challenge where we're journaling all trades to track wins and losses, taking images of um, all trades before and after that we can share with you guys. But I just wanted to do a quick video just to tell you what the rules look like for this. And what I'm getting is a lot of people are getting back to me and they're saying, "Yeah, Bill, I see the strategy, but what if we can't sign up right now? What if we don't have the money to sign up right now?" And the company has really lowered the price, by the way. But some people still can't sign up right now. It's the new year, spend a lot of money doing Christmas and the holidays, so they can't sign up right now. And then there are some people that want to be able to try it before using it, before doing it, on their own. And that I can understand, but you could get started and you have a 7 day money back guarantee period where you can get your money back. But anyway, just want to show you, I mean, of course, the community has all of this here. This is, this is what the journal looks like for us that you'll get access to. And then also, let's see here. This is the process sheet here. You also get access to our Discord channel where we communicate with each other, talking about all the trades. There's a section in there specifically for this, um, RSI impulse strategy. And again, this is on the 5 minute time frame. Some people do use the 1 minute, but for the 100 trade challenge, we're using the 5 minute. But you get access to this impulse document here, which I don't know why, but for some reason I can't. Yeah, it goes step by step here, showing you how to create it, how to create your demo account if you don't have one. And then this is the strategy right here, the videos for it right here. Right. So it's all here, but you have to be a customer of our community, a customer of the company that we're with, okay, in order to get access to the impulse scanner. And then once you become a customer of the company with, you're automatically a customer of our community. And then you get access to all of our training, our strategies, how to use this impulse scanner that the company has, and also our custom indicator, which is called the ATH Enhanced RSI Cross Arrow Indicator. Okay, this is what that impulse scanner looks like, by the way. And so when you look at the rules for this, and again, I made a quick sheet here just to tell you taking trades on the 5 minute time frame. You want to trade with the trend. So the easy way to determine that is to be a customer of our community, use the impulse scanner, and all you basically do is you look for this. You just come to the impulse scanner, go to the 5 minute time frame or whatever time frame you want, doesn't matter, and then you just sort here by macro trend. Probably seen people do this 100 times, and it's going to show you which ones are all aligned here first. Okay, so we're concerned with the 5 minute through the 4 hour. So you just, when you see one that's aligned there, you're going to put a star by it. You're going to go to the next one, and you just keep doing that. And then these are the pairs you do this right before. Now here you see this one's not aligned, so you don't want that one. Okay, now some people want all time frames to be aligned. The actual strategy is written that you just need the 5 minute through the 4 hour. It's up to you how you want to do that. But this is the easy way to do that. It takes about 2 minutes. Now, the hard way to do it, I teach you in my, let me see here. I teach you in my Blue Zone training videos here. And again, these you can get for free, but I teach you here in, it's actually video 2 here, not video 1. So I should probably change that. It is the second video, right? And I show you how to determine the higher time frame trend, which is basically looking at the daily and 4 hour using the EMAs, the 50 to 200 and the 800, because we're looking for that higher time frame trend bias, and we're just concerned with the daily and 4 hour. Okay, and this is the way this is the way I like to do it myself. It takes a little bit of time every week to do this, to go through all 28 Forex pairs and determine which ones you're going to trade for the week and which way they're going to go. And that's why you'll see in my trading view here on my charts here, I have the pairs flagged. So I know that AUD CAD is bearish for the week, and AUD NZD, for instance, is bullish with the blue flag. The red flags are bearish. And then the pairs with no flags, I won't trade this week because they're not syncing on the 4 hour and the daily. Since we're looking at the trend bias, which is more recent, we need to have the daily and the 4 hour both go the same way, right? So if one's bullish, one's bearish, we don't trade that pair. We can't determine which way one of the time frames are actually going, we don't trade that pair. Okay. If the pair is clearly bullish on the 4 hour and the daily, then we trade it. We look for long positions. If it's clearly bearish on the 4 hour and the daily, then we look for short positions. So I like to do it like this myself anyway, because I like to analyze the pairs a little bit. But for beginners or people who just don't have a lot of time, it's actually easier just to use our impulse scanner right before your session starts, whether it's New York, London, or Asian. You go through here, and then these are the pairs that you're going to look to trade and which way, and it's going to tell you which way to trade them, right? USD CAD bullish, USD JPY bullish, right? And then you go through all the pairs like that. It takes less than 2 minutes to do it on the impulse scanner. It takes a little while longer to do it manually in trading view, looking at the analyzing the 4 hour and the daily using those EMAs, the 50, the 200, and the 800. But anyway, however you're going to do it, once you determine which pairs you're going to trade, then you wait for the RSI setup. Now, the easy way to do this is using our community's custom indicator, right? Because it allows you to set alerts. So now it takes about 5 minutes to set your alerts, and then you can walk away from the computer until alert goes off. Now, if you don't have the indicator, then the hard way is to watch the charts constantly, because what you're doing is for a buy, you're waiting for a pullback, and you're waiting for that RSI to go down below the 40 and then cross back up above the 50, and that's your signal that you could have a trade opportunity to get in there. Okay, for sales, you're looking for pullbacks to cause the RSI to go above the 60, then cross back down below the 50. Okay, and that's where you may have a sell opportunity. So this is the RSI right here. I have it set, the top is 60, the bottom's 40, and that midline is 50. So you can see as our indicator, this is our indicator here. As you can see, there's a bullish signal. Now this is EUR/AUD, so I would only look for bullish signals here. I would disregard all these red arrows because these are for sales. So for EUR/AUD, I only want to trade this. I only want to take buys for this week, right? And again, I'm on 5 minute time frame for the trading. So you can see here that the RSI dipped down below that 40, right, into the white zone here. And then right here comes back up and it touches the 50. Okay, and that's why that alert goes off there. Now you have to wait for that candle to close to make sure that stays there, because during that candle formation, during that 5 minutes, it may go on or off. But once it closes, if these arrows are here, they're going to stay there. They don't repaint. Okay, but they will go on and off while that candle is forming during that 5 minute candle. Okay, so you have to wait for that candle to close. Now, once that candle closes there, okay, then you're going to wait, you're going to identify for buys, right? So it says here, when the alerts go off, identify flat top for buys or flat bottoms for sales. Now, alerts going off is assuming that you're a customer of our community and you have access to our community's ATH enhanced RSI cross arrows custom indicator, right? Now, if you don't, then you have to actually, like I say here, you have to watch the charts for this to actually happen. Okay. And there's ways that you can set alerts as well in TradingView for that. But we show people the easy thing to do is, using the indicator. If I've looked at the impulse scanner and I've determined, hey, USD CAD is bullish. So I come down here to USD CAD, right? Now my way, it's also telling me USD CAD is bullish. But now if all I need to do is, let's say I wanted to do this, I go up to alerts here, right? And I go click on price. I select our ATH enhanced RSI cross arrows, right? And I'm just looking for a bull alert. It's either a bull alert or a bear alert. Okay, and then I create it. And so when that alert goes off, I'll get a email and a text message in my phone telling me to come to the chart. Now I have to wait for that candle to close because it may go on and off as that candle is forming, right? Now you can also set alerts for the RSI here if you don't have the indicator, right? But I'd have to look into you could see you can set it for crossing up, right? If it's a bullish, you could set it for crossing up above the 50, and then you can set that alert, and then it'll tell you when it crosses back up, but you're first going to have to wait for it to go below the 40, right? So it's a little more difficult, right? It's just a little more difficult for you. Let me get that off of there. If you're not using our indicator, so it saves a lot of time, saves you a lot of time and hassle. You don't have to just stay at the computer the whole time for like 2 hours or whatever time period you're going to be trading, right? When your session comes in and starts, you can just set those and you can forget them. You can go about your day. You can watch TV. You can watch a football game. Whatever you want to watch. If it's not the weekend, Sunday night, you can watch a football game. Whatever you do, you got to clean the house. You got to do the laundry. Whatever you got to do, you can just set it and forget it. Now, just to look at this here, and I don't usually put the RSI on my charts here, but just to explain to you how that works, right? Again, for buys, we're looking for price to drop down below that 40 level and then cross back above. And that's what it does right here. You can see here, right? Right here, it was down below that 40 level and then it crossed right back above. And that's where the indicator alert goes off. You can also see these red ones, even though we wouldn't take them for this pair. These are selling opportunities here. That's where the indicator goes up above the 60 and then crosses back down below the 50. Okay. So for buys, the indicator goes below the 40, crosses back up above the 50. That's when you have a potential opportunity to take a trade. These are not signals, guys. You have to look again, right? And there's also another rule that I've added to this that the community doesn't do. It's just something that I've added since I've been taking the 100 trade challenge. It's something that I noticed on the trades that lose. Okay, so that additional rule you get from me here. But again, just to show you again, right? The RSI goes above the 60, then right here it crosses back to the 50, right? So, and that's why these indicators go off. So again, if you're not a customer of our company that we're with, you won't have access to the impulse scanner. And once you become a customer of the company that we're with, you automatically become a customer of our community. You get all of our Discord channel, our Facebook group, all of our training strategies, the videos for them, and you also get this custom indicator, right? This custom indicator, the ATH enhanced RSI cross arrows. And that's what makes it easier for you to do this strategy. But you could do it without the company or our community as well. Now, the next thing here, let's look at our thing is wait for the candle to close above the flat top or the flat bottom, right? Above the flat top for a buy or below the flat bottom for a sell. And again, you have to wait for the candle to close, okay? Because sometimes it'll break structure, it'll break that flat top or flat bottom, but then before it closes, it'll come right back down. So let's just look at a couple of these opportunities. I'm going to take this RSI here off my charts for now because, like I said, I don't need it because I have the indicator. But if you don't have the indicator, you will need to have that on your charts. So right here, so one of the other rules that I added on here was for buys, the flat top must be at or above the 50 EMA. For sells, the flat bottom must be at or below the 50 EMA. So in other words, we don't want to buy unless price is above the 50 EMA. And the 50 EMA on my chart is this teal line right here, right? So right here, you can see we get a signal, right? We get a potential opportunity. Now we need a flat top, right? And you can see we get the first flat top is right here. The flat top here is when you get a blue candle followed by a red candle. Flat bottom is when you get a red followed immediately by a blue. So anyway, this particular flat top is below the 50 EMA. It's just below it, okay? But, it's just below it. So let's wait for the next one here. We wouldn't take that trade, right? Because it's below the 50 EMA. So here's the next alert comes out, and now our flat top is up here. right? So let me just show you. So now what we're waiting for a candle to break structure of that flat top. And that flat top for a buy, it's for a buy, and it has formed above the 50 EMA. So it's a valid flat top for us. Now, again, if it forms below the 50, even if it's just below by a little bit, then that's an invalid flat top or flat bottom for this strategy. Now, again, the community is not doing this right now, but this is something that I've noticed during taking my 100 trade challenge. And that's why each individual person has to take their own 100 trade challenge to determine these things. You start to see things that happen in your winning trades, things that happen in your losing trades. This was one of the things that I've seen is there's a lot of times when these indicators go off, buy indicators, potential buy opportunities go off, the price is below the 50 EMA. So I don't want to touch those. I only want to take the buy opportunities when price is above the 50. And I don't want to take sell opportunities when price is above the 50. I want price to be below the 50 to take the sell opportunities. So that's just a little rule that I added on that you get from me here, okay? And I've been able to determine that how? By taking the 100 trade challenge. And I'm only about 10 or 15 trades in, guys, okay? So let's see here. So now right here, this candle right here closes above that valid flat top. So that tells us that's a potential entry right there. So you could look to actually take that trade. Now you would want to determine where your invalidation zone would be at, right? And so your entries right here, I like to use the most recent low, right? Could be your invalidation zone, right? So that'd be right around this area here. You could see the price never comes back to there, and it just takes off to the upside, right? Look how far it goes up. Now, if you miss that one, you get another potential opportunity right here. Indicator goes off. Here's your first flat top. It is above the 50, right? So now you're looking for a break of structure of that valid flat top. You get it on the very next candle, and price just shoots up again. Your invalidation zone would be below your recent low. And again, for this trade challenge, we're just taking one-to-one trades. So if our risk is, 10 pips, our take profit or our goal, shouldn't say our take profit, but our goal is 10 pips away. Now, in addition to that, we do check to see, let me just see if I can show you this real fast. In the journal here, and this video is getting a little bit long here, so I'm going to get it moving along here. Here's our trade journal. So you can see we're just going for these one-to-one trades right now. But what you could see here is that we have a column here where we're checking. So we're clicking one-to-one if it's a win, but then we're keeping track of that trade, and we're going back and we're checking, hey, could we have gotten a 1-2 or 1-3 on that? And then we click on that when we can. You can see there's been a couple wins where, I was able to get a 1-2, okay? So because we want to know, what's our win rate at a 1-1, what's our win rate at a 1-2, and what it is at a 1-3, okay? So at a 1-3, obviously you can lose more trades and still make money, right? At a 1-1, if you win 50% of your trades, you're basically going to break even. At a 1-2, right, then you can lose 2 out of 3 trades and break even, okay? At a 1-3, you can lose 3 out of 4 trades and break even, okay? So that's why it's important to know what you can get. But for the purpose of this challenge, we're starting with just a 1-1. And then we're just tracking it later on, going back to the charts, every few days just to see, hey, I could have got a 1-2 there before it went back down, or I could have got a 1-3. So for instance, on this one here, this one obviously probably could have got a 1-10 on, right? Because your invalidation zone is going to be right down below here, and price moves all the way up here, okay? So this is probably like a 1-8 or a 1-10 you could get, right? And so let me just show you a couple more of these because I don't want to make this video too long. And again, what I do is, again, you you can use the impulse scanner at the start of your session to determine which pairs you're going to trade, right? I like to just keep these flagged, and then I know I don't have to go back to the impulse scanner myself. I know that I want to trade these pairs, and I know which way I want to trade them. So on odd CAD, I know I'm looking to take this down. I get a signal right here, right? And there's my flat bottom, but my flat bottom is above the 50. So that's an invalid flat bottom for me, right? You could see here all these signals. Look at this signal here, okay? So this signal right here, here's your flat. Here's your flat bottom. Flat bottom is below the 50, so that's a valid flat bottom. But what happens? Price never breaks that structure. It just keeps going up. And so this flat bottom keeps you out of the trade. You can't just have one thing. You can't just have an indicator go off and say, oh, okay, I'm going to take that trade. That's not going to give you a good winning percentage, right? You need more confluences, right? More things to happen, right? We got to identify the flat bottom for a sell. We want that flat bottom to be at or below the 50, right? If it is, it's a valid flat bottom. Now we need price to break the structure of that flat bottom before another alert goes off. It doesn't do that. So here's a new alert, right? Where's the flat bottom? The next time you get a red followed by a blue, there's your flat bottom. Is this flat bottom above or below the 50 EMA? It's above. For a sell, we need it to be below. So that's an invalid flat bottom. Here's the next indicator goes off. Okay, after it goes off, there's your flat bottom. Is that above or below? It's above. So it's an invalid flat bottom. It's an invalid opportunity for us, right? You could see that price does break this structure here and would get you in that trade, right? But what would happen? You would lose because price continues up. Now you have another one. Here's another signal. Here's your new flat bottom, right? This one is below the 50 EMA. This one does give you a break of structure to the downside. So this is one that if you would have taken, you would probably lose. You're not going to win every trade. That's one you would probably lose, okay? So let's look at Odd Chef here. Odd Chef right here, we could see here's a signal, right? We're looking for only sales, right? We would set our alerts here. If we have the indicator at the start of our session, we would say, hey, right, we're looking for a bear alert. That's it. Then we could walk away and wait for these to come out, and we'll get notified by email and a text message to our phone. But anyway, here's our flat bottom right here. And for a sell, it needs to be below the 50. Is it? It is, right? Over here, price comes down, breaks the structure of that flat bottom. We wait for that candle to close. That could be a potential entry for us, right? Our invalidation zone would be go up above these recent highs here, right? That doesn't get hit, and price makes a nice move down, right? Giving us a nice trade. Here we have another signal coming out. These are on Friday here, and this flat bottom is just above the 50 EMA. So that's one that you would consider invalid, right? Let's look at AUD NZD here. Here we would just be taking buys because it's bullish. The higher time frame bias is bullish, right? We either know that by using the impulse scanner, right, and looking for that 5-minute through 4-hour to sync, or we use the 50, 200, 800 EMA on the 1-hour and 4-hour to make sure they sync, right? Determine the trend bias. Okay, here's an indicator going out, right? And there's our flat top right there. Our flat top's right here, right? It's a different line, but we'll just use that. Is it above the 50 for a buy? For buys, it needs to be above the 50. Is it above? Yes, it is. Okay, right here, this candle breaks the structure and closes above that, right? Let me just see this real fast. It's hard to see with these dashed lines here. Right here, it closes above, right? Or in this case, our invalidation zone would have to go down here, okay? And you can see price doesn't come anywhere close to that. and it makes a nice move up, giving us a nice trade. Okay. Now, I would not use this low here because this is a consolidation area. There's no movement up. You know what I mean? I would use it. I would have to use this. I like to use the most recent low. Now, if you use that one, you'd probably get stopped out of the loss. But in this case here, looking at the chart, looking at the price action, I would use this area down here. Okay. So what do we have here? We have another alert go off here. We have a flat top right here, but what's the problem there? It's a buy, and price is below the 50, so we wouldn't look at that, right? Let's look at another pair here. I'm just trying to find some kind of makes sense here for you. I think it was, so you could see like these ones here. You get the indicator goes off, right? Your flat top is kind of right on the 50-day, which is fine, right? But then what happens is price doesn't break the structure, and then you get another alert right here. Flat top's in the same place, right? With these two candles, the blue followed by the red. And here's your break of structure candle breaking that flat top, which is a valid flat top because it's above the 50. And again, your invalidation zone would be down here, and price moves up, and you will be out of that trade more or less up here, right? Then here you get another one. Your flat top's up here. You're above the 50, but what happens is price never breaks that structure. It comes down. You get another one right here. Price is right at your 50. The flat top is right on your 50 EMA, right? So it's valid. You get a break of that structure right here. It breaks that flat top right here on that candle. When that candle closes, you would use this low down here for your invalidation zone, and price makes a nice move up. So if I went through every one of these charts today, you would see multiple wins on each one of these pairs that I have highlighted. Okay, and you would see some losses as well. I showed you a loss there. But the thing is that you would win a far more amount of trades than you would lose. Now, I may make a video like that later on today or tomorrow and go through each individual pair that I have flagged here to see what you would get. But for the purpose of this video, I just wanted to just go through a couple pairs here, right? Just see if there's another one where I can show you. Let's see here. Right here, we kind of get an indicator go off. Flat top is right here. But the problem with that is that flat top is below the 50. So we would ignore that. That's not valid. Okay. Even though it's probably still a good trade, although right here, price comes back down and, almost gets you stopped out. But here's then another alert that goes out. And now that flat top, the same place, is above the 50. So now we would look, this candle right here breaks that structure, that flat top. So you would have to enter up here. So it's a little bit further away than your invalidation zone, right? Which would be down below this low. Okay, some people might use this low here as well because of this candle wick. But you could see the huge move that this makes to the upside, giving you tons of profit, right? Tons of profit. It makes a huge move. I shouldn't say profit. It's just a potential trade opportunity. So it's tons of potential profit that you could get had you just determined to take that trade, had you been at the charts and determined to take that trade. So this is Bill Soriano from Pittsburgh, guys. If you watch this video, you want to get started, you want to get access to, our join our company that we're with, so you get access to the impulse scanner. And then once you become a customer of our company, you get access to everything at our community for free. So you get our Discord channel, you get the indicator to make it easier for you to find these trades during the session when you're trading, and get access to all of our training, the videos for how to do the strategy. Like I said, it's basically just what I'm showing you here, except I showed you a way that you could do it without becoming a customer of our community. But that's not the best way to go. But for some of you, it may be the only way to go right now. And then I add that additional rule here where for buys, flat top must be at or above the 50 EMA, and for sells, the flat bottom must be at or below the 50. Okay. So any questions, get back with me. If you're ready to get started, let me know. I'll send you the link to sign up. Bill Soriano from Pittsburgh. Have a great day.